Welcome to the Solemn YuGiOh channel where you discuss everything collecting and investing in Yu-Gi-Oh! Today we are talking about why would you ever sell cards even though you believe in them. So take for example me. I believe that longer term, let's say from now to 10 years, certain Yu-Gi-Oh! Cards will have grown well. Now not all of them. That's a very important topic as well. Not all, we see this in Pokemon as well. Certain cards collapsed like 50% down, 80% down, while others have still soared. So it's definitely not painting with a broad brush. But in general, do you think there will be more value to be had over slightly longer term? I do believe so. So why would you then ever sell cards if you believe they still have potential? So that's why today we are talking about basically the art of selling. Why would you ever sell? Is there a reason to sell? So first we start with a very important basic concept, and that's the fact that these are very speculative assets. Their value is entirely dependent on, is there someone after you willing to pay more? There is no inherent value. There is no production. Your Blue Eyes White Dragon does not own a truck and a construction company providing actual services. It's literally, am I willing to pay more for this Blue Eyes than the previous person? And so that has its advantages in the sense that if you can play in that insane volatility, you might make some solid money, but also disadvantages in the sense that if the markets go down, there is no fundamental basis there that you can still utilize. If you buy a company that is not doing well, but on its balance sheet, it at least has assets that are worth something. Even if that all collapses, you still have those assets. There is still something on those balance sheets. So this is a risky market by default. Anyone telling you otherwise is a fucking liar. I don't care if you're into gold, silver, Bitcoin, Tesla options. I don't care. All of that is extremely speculative. And of course, like Tesla is still a legitimate company. Let's not get into that. You can start talking about PE ratios. Maybe it's overvalued. Anything where stuff can just 10x overnight, you are in a speculative market. So my personal philosophy is that you don't want to be too overexposed to this. That's why I always said personally, I don't want collectibles to go over 20% for me personally. Now some would say that's crazy, that's super high. And yeah, it is actually high. So having more than 20%, wow. So getting back into why would you ever sell? For me, there's two reasons. First, balancing your asset allocation. And second is reducing your risk. So let's say we have a little pie chart here. This is pie chart of Maxime. Yeah. Let's say 20% is what's allowed to be collectible. So something like this. I don't know if this is 20, but let's say this is collectible. Let's give it a little color. Boom. This is our collectibles piece of the pie. And then everything else can be something else. We have a little bit of retirement. There's some tax benefits, completely dependent on your country. Then there's, you have your cash. Okay, cool. And then you have maybe something else. Maybe it's real estate. Maybe it's bond. I don't care. And then everything else is maybe stock. Yeah. And here is TCG. And again, this is already, if you show this to a financial advisor, they already tell you like, what the fuck? Why so much? That's a lot. But let's say that's your setup, right? I'm not telling you you should. I'm no financial advisor, but let's say that's your setup. In a utopic perfect world, all of these would go up perfectly the same. If the market is completely efficient, there's nothing that could overprice or underprice for any reason whatsoever, and the only growth would be inflation, right? Or actual productive growth. And so all of these would be going up exactly the same. Now, of course, this world we just spoke of doesn't exist. Some things grow faster than others or don't grow as fast as others. And so while your goal may be to have this asset allocation, the markets may have a different idea for you. And so maybe let's say this is bonds and this is real estate. It's not for me, but let's say that's the case. Let's say TCGs have completely outperformed everything else. That's not the case, by the way. Like if you look at the markets lately, TCGs have outperformed everything except for singular stocks. Like if you say like, but I'm only in Tesla. Sure, that stock has outperformed TCGs. But then if you compare, TCGs to something like an S&P 500 index, those TCGs have outperformed that. So, let's say your stock was broadly diversified. So that means after that whole run, bonds did nothing and your retirement barely changed. So we now change our pie. Maybe it's something like this now. And that's not the case. Again, this is just, made up. Maybe this is where we're at now. And so while previously your goal was to have this allocation in TCGs because they're riskier, more speculative, there's no fundamental basis for them, this new bull rush has now made it so your entire asset allocation is completely out of whack. You may have started and invested in a way that puts you at 20%, but the growth in TCGs has completely crushed everything else. The growth in stocks has crushed everything else, and now this is all out of whack. So what can you do? Well, you can rob a bank and put more of that money into bonds and real estate, but that would be illegal. So how do you fix this? Well, there's only one way. You try to sell some of that off to get back to where you were. Now that money can either go into more stock, maybe you believe in the stock, or it can go into your bonds and real estate and so forth. Because if your bonds and real estate underperformed, but fundamentally nothing changed about them, maybe they are underpriced. Maybe your stock and your TCGs are overpriced. Maybe you need to sell some of your TCGs, move them into something else. Now, of course, there's way more at play. You can talk about, oh, but the interest rates are so low, so bonds are bad, blah, blah, blah. I get it. Let's not get into too much details here. If you were very steadfast about my asset allocation needs to be this, well, at some point you gotta sell some shit. So in order to rebalance that, you may want to sell certain things. Likewise, if you are a fund like ARK, I know a lot of people are big fans of that. I'm personally not invested in them, but for example, the Disruptive Innovations Technologies fund from ARK, as far as I'm aware, its holding in Tesla was very, very large at first. And then because Tesla soared so much, I believe they sold some of that to rebalance it. Because imagine, once again, if your pie is this. Wow, these pies suck ass. I'm so sorry. But let's say your pie is this, and let's say this sliver is Tesla, right? And so you want your fund to be well balanced. Okay, let's say you had your bull rush in Tesla. Boom, your beautiful pie. Suddenly, this is Tesla because they grew so much compared to the other companies you were holding. Well, if your goal was to have 10% Tesla, now you gotta sell some Tesla, put it into some other stuff. That doesn't mean you no longer believe in Tesla, but if your goal was 10% and now it grew so much more than everything else, either they are legitimately overperforming because they are just that much better, or they are being overvalued. And once again, you are taking away some risk by selling some of that off, even though you believe in it. So once again, if your goal of your fund, and I'm actually not sure, I've read this about ARK, but I've never been really deep into how their allocation is. So if you're very deep into them, let me know. But I believe that their holding in Tesla was like 10%. And because of that bull rush, if they wanted to keep it that way, I'm pretty sure Tesla outperformed everything else they held. So if they want to bring that back to 10, well, they had to sell a bit. But again, I'm not super closely following their allocation, so don't kill me for that. Now that that's out of the way, let's talk about decreasing your risk. So imagine you bought some cards at, let's say, 200, and you bought 3 cards. You have your 3 cool ass cards. Wow, these are nice cards, huh? They were each 200 when you bought them. Cool. You believed in them, you think they'll grow long term, you think they're iconic, amazing, rare enough, and so forth. Now this means you expose $600 of your capital to these cards, a risky asset. It is entirely possible that this goes way down or way up. Who knows, right? But you put 600 on the line. From now on, there's opportunity cost in that 600, as in if those cards don't do anything and you put 600 in, and meanwhile that 600 could have been in stock or whatever you're into, that could outperform those cards. You are now losing the money you could have made. And beyond that, of course, you also have just the risk. Maybe the cards go down or maybe they go up. Who knows? Let's say there's an insane market, everything just goes up, 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 up. Something like you've seen in Pokemon, YuGiOh, and all the trading cards, or Flesh and Blood, whatever you're into. So those same cards are now suddenly worth 600. Now, you bought them and you believed in them, right? So why would you ever sell? Well, again, you're in a speculative market. What you can now do is sell one of those cards. So let's go back into the red. Boom. You sell one of these. Does that mean you no longer believe in it? No. But what you did is you took out all of the risk because you already broke even, but you got 2 free cards on top of that. Not only did you get to keep these cards, but you are essentially riskless beyond them getting stolen and damaged and all of the risks that go along with owning cards, because that in itself also has risks. But you are no longer putting your own capital on the line. By just selling one of them, you now have 2 free cards, and they may appreciate, they may go down, up, in circles, sideways, who knows. But you have gone from being completely exposed to a very speculative asset to here's my 2 free speculative assets. Now, one big caveat. I am not telling you that you can endlessly do this, because if everything just keeps on tripling, sure, then you can do that. But that only works as long as things go up. That is a big risk. But if you have the opportunity, where you bought 3 cards for 200. They all went up massively, and then you sell one of them, and now suddenly you are holding the other 2 essentially risk-free. Why not, right? You could take it a step further. Maybe you get rid of 2 of these. So now not only did you double your money, and you can put that maybe into something like stock. Wow, what beautiful writing. Into something like stock that has fundamental basis. Now you got free stock and your money back and the card for free. That is basically, you know, best of all the worlds, right? Now again, that only works as long as things go up. This is also why you have a lot of big Instagram accounts and YouTubers within trading card games with these insane collections. And you're like, how did they do that? Well, as long as things were going up, they could continuously buy and sell and buy and sell and buy and sell and just accrue these free collections. That doesn't mean they don't believe in Yu-Gi-Oh! Or in Pokemon or in MTG or in any of that, but they are decreasing their risk whilst pocketing free cards. There is once again, a big caveat. Let's say that you do that with $20 cards. And this is a bit personal for everyone because it depends on how much you value your time. But let's say you did this with $20 cards. So you are exposed to this market for $60. Market goes up on them as well. Crazy stuff. In the same rate, you know, let's not be biased. Let's say they grew at the same rate as the other cards. So now they are each $60. The time you spent buying these, finding the deal, waiting for it to arrive. Let's say you spent an hour just acquiring them, getting it from the post office, looking through eBay, getting informed. Let's say an hour, and that's actually being real nice. I think you spend way more time on it, but let's say 1 hour. Okay, so you spend 1 hour in your acquisition phase. And then now you want to do the trick, let's say we just spoke about, and you sell one so you're no longer risking anything really. And the other 2 are free. Cool, right? You also still need to ship this card. So how long does that take? Finding a buyer, writing the address, going to the post office, doing all of this crap. Maybe that was another hour. So now, sure, you broke even on everything and you have your 2 free cards, but you also spent 2 hours. Now, 2 hours, and let's say you took a profit of 40, right? That means you were paid $20 per hour for that work. So while it is true you have gotten rid of your $60 risk, you did spend 2 hours getting there. And that is the same way for the more expensive cards, by the way. But, you know, if you are selling a $600 card, maybe getting $200 an hour for that work is worth it for you. But again, that depends. If you are a gazillionaire or whatever, you're like, I'm not gonna spend 2 fucking hours for $200. Shut the fuck up. But if you're just middle class, you're like, fuck yeah, right? This is a very best case scenario type of deal, right? Because that assumes these cards also tripled in value and so forth. And then you gotta ask yourself essentially, is all of the risk you are taking on in these lower end deals worth 20 per hour for you? Or would you rather, you know, just do a job and get money risk-free, essentially? I can't answer that for you. That's something you gotta answer for yourself, but just be aware if you are trying to do that trick on lower end items, it is very easy to lose track of how much time you are actually spending to make a couple dollars, and maybe that isn't worth it. But again, that's for you. You know, if you're a lawyer, this shit probably isn't worth it for you. But if you don't have a job, this is probably an upgrade regardless. So that's just something you really have to keep in mind. It's really easy to think, well, I just made $40, but like if you spend 6 hours making the $40, maybe it wasn't worth it depending on your situation. So that is basically the 2 ways I look at this, why you would ever sell cards even though you believe in the market. You know, number 1, asset allocation. Number 2, decreasing risk. You are selling into a bull market. Whether it is overpriced or not, who knows? I've made plenty of videos about potential retraces, but in the end, no one can predict the future, you know? Some people thought back in September, everything's too high, it's gonna crash next week, and it never fucking did. But at least you are reducing risk. By selling some stuff after having an insane bull run, and just cashing in some of those gains, you are holding the rest risk-free, or at least far less risky. Now, a third reason, that's maybe a fun one, is funding other cards. Maybe you are selling 2 cards and you're just gonna move that money straight into other cards, or maybe another collectible altogether. Who knows? That's also an option, you know. I recently sold, I wanna say 2 cards so far, but there's 2 more for sale because I bought another card that's worth as much as all of those cards combined. So then you're not reducing your risk, you're still in the same asset, but that's also an option, you know. It's not that people only sell just to reduce risk or change their asset allocation. It can also just be to justify another purchase. So that is all. Hope you found this interesting. Like, subscribe, and I will see you soon. Ciao.